So can you really make six figures your first year as a loan officer? Hey guys, welcome to my channel. My name's Enrique. I'm a mortgage broker based in Southern California. And in today's video, I want to go over whether or not it's possible to actually make six figures as they claim your first year in the business. So in this video, I'm gonna cover how loan officers get paid, the different types of loan officers and their compensation structures. We're going to reverse engineer how you can actually make $100,000 your first year. Then I'm gonna talk about my first year in the business, how much I made, and also go over my best month in the business so you guys have some context. And then at the end, I'm gonna go over what I would do if I was a brand new loan officer to make $100,000 my first year. So without further ado, let's get started. All right, so part one here, let's talk about how a loan officer gets paid. So it's very different than what most people are familiar with, which is the real estate agent. The real estate agent gets paid off of the purchase price. So let's say a home's being sold for $500,000. Then the real estate agent will get paid anywhere from 2 to 6% of the purchase price, whereas the loan officer gets paid off of the loan amount. So let's say for that home, the buyer you're helping is getting a loan amount of $400,000. Then you would get paid anywhere from 1 to 2.5% of those $400,000. Now, if you're thinking, hey Enrique, well, isn't it better to be a real estate agent then if the loan officer is getting paid not only a lesser percentage, but off of the loan amount? Make sure you check out my video, 6 reasons why being a loan officer is better than being a real estate agent, where I break that down completely. But yeah, that's essentially how a loan officer gets paid. Now you're probably wondering, well, who actually pays that commission? Because with a real estate agent, it's either the seller or the buyer that pays the agent's commission. Well, with a loan officer, there's 2 ways you can get paid. The first is called borrower paid. And this is where the borrower or your client pays your commission directly, and it's part of your closing costs, also known as origination points. On the other hand, we have what's called lender paid. This is where the bank pays for your commission, so it's not gonna get charged to the client directly, but it is financed into the interest rate. In other words, you're gonna give the client, or they're gonna give the client, a higher interest rate above market because your commission is part of that higher interest rate. All right, part 2, now let's talk about the different types of loan officers and their compensation structures. So the first type of loan officer you have is going to be the retail loan officer. This is the loan officer that works at Wells Fargo, Chase, US Bank, etc. The second type of loan officer you can have is the direct lender. This is a loan officer that works at just one mortgage company that specializes in mortgages. Then you have the mortgage broker. The mortgage broker is a loan officer that works with multiple banks. For example, I'm a mortgage broker, and at my company, we work with over 160 different banks. So starting with the retail loan officer, the way you're gonna get paid is you're most likely gonna have a base salary, and then you're gonna get a very, very small commission off of every loan that you close. As a direct lender, for the most part, you're going to be commission-based. You're gonna get a slightly higher percentage of the loan amount. I don't know the exact amount for retail loan officers, what percentage they get paid, but I do know that for direct lenders, it's much higher, anywhere from 0.75% all the way to 1.5% of the loan amount. And then as a mortgage broker, for the most part, you're going to be just commission as well, but you're gonna be able to make anywhere from 0.5% all the way to 2.5% of the purchase price. So you can see that as you graduate from retail, direct lender to mortgage broker, the compensation percentages go up. Another important thing here is that a retail loan officer and a direct lender, most of them are going to be lender paid. So like we talked about earlier, lender paid means the commission is not charged upfront, it's financed into the interest rate. And that's why a direct lender and a retail loan officer, for the most part, are going to have higher interest rates, because a mortgage broker has the option of doing both. I have the option of doing both. I can do lender paid or I can do borrower paid. And as borrower paid, you're able to get the client a lower interest rate because your commission is not financed in the interest rate, right? So that's why a lot of times, and that's actually the reason I left being a direct lender, because I was getting shopped because everyone wants the low interest rate. Now it's case by case, it depends what's best for your borrower and what they decide, but that's kind of a rough breakdown of the 3 different types of loan officers and their compensation. All right, so part 3, now let's reverse engineer and see how you can actually make 6 figures or $100,000 your first year as a loan officer based on some average compensation structures. All right, so as a new loan officer, let's assume you're gonna make anywhere from 0.5% all the way to 1.5%. And we'll take the middle ground here. Let's say 1.25% for the case of this example that you're going to make as a loan officer your first year. And now depending where you live, you're also going to get different loan amounts, right? The loan amounts in New York are completely different than Florida, Nebraska, Alabama, etc. So it's completely different loan amounts also depending where you live. So one deal for you might make you $3,000, whereas one deal in LA might make someone $20,000 or $10,000. For instance, a $250,000 loan with 1.25% would be roughly $3,000. A $500,000 loan with 1.25% will make you roughly $6,000. A $750,000 loan amount with 1.25% will make you roughly $9,000. And then a $1 million loan amount with 1.25% will make you roughly $12,000. So the average commission here for this example is going to be $7,000. You guys do your own math at home depending where you live and the loan amounts in your area. So in order to make $100,000 your first year, based on that $7,800 average, you will need to close about 12 deals your first year in order to make $100,000. So this is definitely doable. There's plenty of loan officers doing many deals like that, but it's not all that easy. And that's what we're gonna talk about next, because it sounds easy, right? Oh, hey, I'm gonna get one deal. But believe me, it's not easy. There's loan officers I know that it took them 2 years to close just one deal. All right, part 4, now let's talk about how much I made my first year and the most I've made in a single month. My first year was the tail end of the refi boom when everyone was refinancing. Rates had already gone up, so I didn't really get too many refinances. I think I got like 1 refinance or 2 refinances. But my first year, I closed about $1.4 to $1.6 million. So that's roughly $14,000 to $28,000 in my first year. Now, this does not mean that you guys cannot make that money, because what I'm about to tell you next is gonna blow your mind. The beautiful thing about real estate, the beautiful thing about being a loan officer is that your business is going to grow exponentially. So in the first year, you might just get 1 deal. The second year, you're gonna get 5 deals. And then the next year, you're gonna get 10, 20, 30, etc. So my best month so far, I've made close to $40,000 to $50,000 in just 1 month. So now focusing more on prospecting, because once you have that training down, once you have the materials, it's gonna be easier to prospect. In the beginning, I didn't prospect because I didn't know what to say. I didn't know how to say it, and I didn't have anything to communicate, right? No materials to deliver. And then the next thing I wanna go over here that jumpstarted my business was your network. Your network. There's loan officers out there that they're not great loan officers, but because they know the right people, they have the right friends, they have a lot of friends, they're able to close a lot of deals. So focus on these 3 things when you're a brand new loan officer. My training, getting that down greatly, right? Also, going through your guidelines, read your contracts. That's something I'm gonna do in the next few days, is read all the contracts, all the guidelines again. Go out there and prospect, have your materials. If you don't have materials, you're not going to prospect. Make sure you invest in your business, you guys, get those materials. And the next thing is expand your network, right? Whether that be CPAs, attorneys, real estate agents. So expand your network, and that's gonna be a way to jumpstart and get those 100K. Because for me, when I made those $40,000 to $50,000, that was purely off of, I was well trained. Also, I had the network. That's a jumpstart, that's a hack. Be trained, have a network, that's a hack. You probably won't even need to prospect, right? But obviously you gotta prospect. So that's pretty much it for today's video. Hopefully you guys enjoyed it. See you in the next one, and be great.